The reverse mortgage paradox. Welcome back, and thank you for joining us. Last week, we reported on a Consumer Financial Protection Bureau data release. It found that nearly 1 million older homeowners are facing potential foreclosure and eviction. Then the following week, the Secretary of Housing and Urban Development sat down with the CEO of AARP to discuss seniors aging in place and senior housing security. But let's look at the CFPB report. It begins with this. Since April 2020, the Census Bureau has tracked the number and characteristics of homeowners that are struggling to make their monthly mortgage payments. As of July 2021, an estimated 682,400 older adults, defined as those 65 and older, were behind on their mortgage payments. Now, such news is not only distressing, but it should spur the pursuit of all possible foreclosure prevention options. And surprisingly, the CFPB's report does not mention reverse mortgages a single time. You can search the document online. We've provided a link in today's show notes. Now, last week's AARP video, it was an interview between HUD Secretary Marcia Fudge and AARP CEO Joanne Jenkins. The interview took place at Victory Heights, a HUD-funded affordable senior apartment complex in Washington, D.C. Quite frankly, the facility is beautiful and spacious, a facility that most children would find suitable for family members 62 and older that have a limited income. A variety of topics were discussed in the 12-minute interview, ranging from aging in place, reducing barriers for families to construct accessory dwelling units for older family members, and homelessness. And each of those are a worthy topic of discussion, but with one notable exception. Reverse mortgages, or even the federally insured home equity conversion mortgage program, was not mentioned one single time. While impressive, Victory Heights apartments only have 75 one-bedroom units. So how do we meet the needs of thousands or tens of thousands of other homeowners, 65 and older, who may not meet the guidelines or be able to find such accommodations or qualify for Section 202 rent subsidies? It's a sincere and honest question that warrants examination, especially since the majority of older homeowners have expressed their desire to remain in their existing home and then age in place. Call it the reverse mortgage paradox. An FHA-supervised, government-sponsored loan that could help thousands of at-risk senior homeowners is being largely ignored, or if it is mentioned, is coupled with admonishments to exercise caution. Yes, when you're a hammer or an originator, everything may look like a nail. However, too often that means for older homeowners to construct a more secure retirement is being disregarded when it's not mentioned. That said, HUD's mission is a noble one and is generally effective in helping millions of Americans avoid homelessness or provide a better quality of life. And for that, they should be commended. However, one potential solution is hiding in plain sight, a means to prevent unnecessary foreclosure, a lower standard of living, and financial angst in retirement. Certainly, lenders and originators are reaching out to eligible households. However, just an occasional reference to reverse mortgages by our federal housing agencies that help create the program, well, that would actually expand public awareness and could increase credibility. That's it for us. Be sure to leave your comments in the comment section below. And you can help us grow our audience and ranking on YouTube. We'd politely ask you to click on the like button and subscribe and turn on notifications by clicking on the bell. Today, you can listen to our latest episode of our podcast, Heck'em World Weekly, here at heckemworld.com, or listen and subscribe on iTunes. Thanks for joining us, and have a great week.